Good morning, everybody. Thanks for attending today and taking the time to join us on this session on underinsurance and how we might be able to mitigate the risks for your clients. We appreciate there's a lot of noise in the marketplace at the moment, and you will know some of the detail we will cover. However, we thought it would be good to refresh and highlight some of the issues with some claim examples as we go along. Any questions that you might have, feel free to type them into the questions and answers box that you can see on your screen, and we'll pick these up at the end, and anything we can't answer, we'll come back to you after the webinar. Rich. So, the agenda for today: what does it mean to be underinsured? The dangers and consequences of underinsurance for your clients, how your client's property can become underinsured, whether booking a free reinstatement cost assessment for your clients would be of value to you to help retain more of your blocks of flats policies, and right at the end we'll have a quick recap as well with regards to the takeaways. So, starting with a simple question: should your customers insure their property for the market value or the rebuild value? And if you'd like to type your answers into the questions and answers box, we'll give you a minute or two just to pop those into there. Yeah, everybody seems to be going down the same route.
Morning, everyone. So thanks for all the answers there. Everybody seems to be going down the same route, which is really good. One of the tricky things that we think for a customer is actually getting to the rebuild value of the property. I think most people know the market value. But I think since a lot of properties were originally built, and especially over the last few years, a lot of properties have now been extended, additional bathrooms, bedrooms added. Some people have had garage conversions, summer houses, which are all adding additional cost. Some people forget to tell us about those or forget to tell you about those. Also, we need to think about the demolition and removal of debris costs, planning consent, architect's fees, alternative accommodation if the worst was to happen and it was a total loss. You know, we just need to think about all these extra factors when we're coming up with that rebuild of it. From our point of view, some of this is important to think about also on bedroom rated policies. What we can find is that downstairs can be increased, maybe doubled in size with no additional bedrooms on top. So that might then just increase the rebuild quite a lot and take you quite close to that rebuild limit on a bedroom rated policy. Our policies and most of the policies in the market have a provision to include index linking, which we add at renewal, which will try and keep pace with the correct sum insured. But over time, we feel it is a good idea to have a rebuild cost assessment just to reset that sum insured, make sure that your customers are properly protected. But again, we understand this could be problematic and will involve a cost. Customers can access online tools to help them do that, but again, this can be difficult to find for a consumer and for them to also navigate. So in this slide, we just wanted to touch on the role of index linking in helping mitigate the cost of insurance, and I'm sure you can all see the bullets on there. So index linking aims to prevent a property from being insured by helping to mitigate inflation through the increasing policy sum insured at each renewal. Index linking factors in changing costs associated with a rebuilding with the rebuilding of property, such as for labour, building materials, and also mentioned alternative accommodation as well. The BCIS House Rebuilding Cost Index is what we use and is widely used within the market to provide guidance to surveyors, property owners, and insurance services to know what we should be applying at each renewal. We thought it would be good to share this slide just so it shows how index linking has moved over the last 18 months in particular. We all know probably the reasons why, so lots of global factors, the war in Ukraine, COVID, local events around the UK, they've all resulted in driving inflation up. Fortunately, it seems to be steady, flattening, and in September, we're going to see a reduction by around half of what index it was. So hopefully you will see those flatten out a little bit and become a little bit more consistent as to where they were a couple of years ago.
Okay, time for another question then. So, in the UK, what percentage of properties do you believe are underinsured? And again, just enter a percentage in the questions and answers box again and let us know what you think. Thank you, Thomas. Oh, flying in now.
Quite a lot of variance on
Yeah,
this as well.
Definitely. Yeah. So some are a little bit closer than others. So this slide shows a very top level picture of underinsurance nationally, and it's extrapolated from the data derived from the rebuildcostassessment.com during the year between September 2021 and August 2022. And I think the key messages are that more than 9 out of 10 UK buildings are insured for the wrong amount. 83% of the properties are underinsured. 13% of properties are actually overinsured. And on average, buildings are insured for 66% less than the amount they should be, and overinsured are on average over 132% of the correct amount. Further to this, estimates on Zoopla for UK homes suggest that over 600,000 high-value properties, those that exceed over £1 million rebuild, are estimated to be underinsured. And just out of interest, a similar estimate for the British Property Federation estimates that underinsurance total for UK commercial properties alone totals £375 billion. So sizable figures there. So, what about the dangers and the consequences of underinsurance? So, the main risk of underinsurance, should your customer have a claim and the property is 25% underinsured, the claim payment would be reduced by this amount. From an alternative perspective, if they had a sum insured that was more than the notional sum insured on the policy, then the average can also apply on the amount of underinsurance. But in the worst case scenario, the property owner may have to completely rebuild their property, which would also include clearing demolition prior to the rebuild. However, the amount that they receive from the insurance claim could fall significantly short of the cost of to fund the total or partial rebuild of the property. The insurer could reduce any payment made in the event of a rebuild claim by up to the total amount of underinsurance present at the time of loss. In a worst case scenario overall, claims could even be rejected if the sum insured breaches our binder limit.
we thought it would be good just to show this by way of an example of a claim that we had, which was reported to us in November 21, and it was a claim that was as a result of Storm Orwin. The claim was submitted by the whole policyholder, and it included damage to the roof as well as internal damage. Rainwater and sleet leaked into most of the apartments at the front and the rear of the property, and also the customer's shop, which was at the front of the property. This included extensive damage to ceilings, electrics, floors, and as you can imagine, the property was a real mess. At renewal, the sum insured had been index linked from its previous value, and it was around £325,000. The loss adjuster went out to the building, and he estimated the rebuild to be over £1 million. The customer disputed this, and they went and got their own surveyor's report, which showed that sum insured should be about £1.8 million. That comprised £1.4 million for the building construction, and the remainder to cover the demolition surveys, fees and contingent costs. So this may seem like an unprecedented case, and the customer only got paid out around about 17% of their claim. But we've also had more recent examples where clients' blocks of flats have had their rebuild cost calculated at significantly higher values than their existing declared values. So a couple of examples of these are, we had property insured for 1.8 million. The reinstatement cost assessment came back at 3.2. Another one was a value of 1.2 million. That one came back in at 1.8. And the final example, client had two blocks, and there was a difference of around 1.8 million. So that went from 2.9 to 4.7. Some of the issues around these is that once it breaches our sum insured limit, then the broker then had to find alternative homes for these policies. So we just wanted to highlight those issues there. So moving on to the next slide, we also thought it was worthwhile to highlight another way in which claims can be affected, not necessarily through premium, through underinsurance, but more by premium average. So this could be where incorrect risk details have been advised at the start of the policy, such as where the property was listed or the number of bedrooms. Our bedroom rated policy would go to 5 bedrooms. So if a property has more than this, it has to go into our sum insured policy. With many people working from home, they may now count a bedroom as an office and advise that their property has 1 bedroom fewer than it actually has. But it is what the property was originally built for that counts for us. However, we would class the number of bedrooms, and ultimately it's what they would probably put their property up for sale for, as to what the number of bedrooms generally is. So if the property has more bedrooms than we've been disclosed, then it could affect the premium, and we can apply premium average to any claim settlement. So if it turned out that the property did not meet all the criteria of a bedroom rated product, so it had more than 5 bedrooms, it would then have to move to a sum insured product, and then we would apply premium average. A listed property would also be classed as a sum insured product and not acceptable on our bedroom rated product, so that would have the same issues as well. So a recent example of one of these is a broker insured a property with us, and a claim was made. The loss adjuster went to see the property, and initially everything was fine. However, when our claims team had a conversation with the broker, it came to light that the property was listed, and therefore it wasn't acceptable on our bedroom rated product. So we had to move it over to our sum insured product. So this meant the broker then had to go and get the correct rebuild value for the property, so we could do that on the correct basis, and we could then rate it on the sum insured. product that we have. The premium that was paid under the bedroom rating was £400, but on the sum insured product, it was more around £1,600. So again, this affected the payout to the customer, and we only paid out about 25% of the loss. So finally, we also thought this was worthwhile including as well. So this is just an example of how a sum insured could have moved over the last 2 years, especially one that sits under a bedroom rated policy. So if in June 21 we had accepted a policy on a blanket sum insured, but the estimated rebuild at the cost at the time was round about 725,000, with index linking applying over the 2 years, the policy would now breach the £1 million limit. So for large properties that haven't had a rebuild value for a couple of years, they could still end up being underinsured on a bedroom rated product.
Okay, thank you, Richard. So another question for you, so what is the main cause of property becoming underinsured? So what do you think the main cause would be? Okay, so typically the risk of underinsurance increases over time. The owner has not had a mortgage valuation, professional valuation or reinstatement cost assessment recently, and is relying on the rebuild value based on previous years or on the market value. The owner's policy has not benefited from index linking, which aims to prevent the property, as we've said before, from being underinsured through helping to mitigate the inflation by increasing the policy sum insured each time of renewal. The sums insured are based on a notional market value, or an inaccurate estimation has been made based on some historical information. And as we've said before, there's no account that's been taken into account with regards to structural changes made to the property. The simplest things are extensions or even garage conversions. It's going to cost and increase that value, that cost. So if we were to ask you, do you know when your client's blocks of flats last had a rebuild assessment, would you actually know the answer to that question? I think we all kind of know, just for our own possible insurance. But if they haven't had it done, they could be at risk of losing thousands of pounds in the event of a claim. So this is where a reinstatement cost assessment can help your clients and can be completed by simple on-site assessment, a sample exercise of properties of a similar type within a client's portfolio, a desktop assessment and report, or a combination of both an on-site and desktop assessment. And this would be applicable for all properties up to £10 million. A rebuild cost assessment includes an estimated cost for the demolition and rebuilding of the property, and also covers the main structure of the property, including foundations, half of the cost of party walls and protecting adjoining structures, peripheral features that form part of the development, the cost of demolition of the property and debris removal, and of course the cost of professional fees. So, another question for you. How would a free reinstatement cost assessment for your clients be of value in helping you to retain more of your blocks of flats insurance policies? So, this is an offer for yourselves. Here's how you can, after today's session, book a free reinstatement cost assessment for your blocks of flats clients. You can take advantage of this offer to help your clients mitigate the risks of not having their property correctly valued. And we are offering this free valuation for your clients who own a block of flats. And as I said, it's open from today onwards. It's only for a limited period, so you do want to get in there and book your valuation for your clients. And you can do that either by contacting your dedicated business development manager. You can send an email to enq@vasec.co.uk, or by simply calling the office on 0115 950 5052. And a team member will then talk you through what the process is. Just as a caveat, you've got to remember that even by having a desktop valuation, it doesn't necessarily result in there being no underinsurance in your client's property whatsoever. But it will give them a more accurate possible view than what they have at this time. So yes, there are a few T's and C's with regards to the promotion, which you can see on here at the moment in time, which I'm sure you'll all love to read through. But they're there, and they will be reconfirmed as you are going through it. So, just to recap, the rebuild cost assessment is available for blocks of flats only, with a rebuild up to a maximum of £10 million, and it must be for an existing customer. So, as we're coming towards the end, here are just a few of the key takeaways that we will be included in this webinar. So, make your clients aware of the risks and dangers of underinsurance when managing their property or portfolio of properties. They should consider seeking professional guidance, ensure that their property's rebuild value is up to date. We can provide your clients with index linking on sums insured for rebuilding their client's blocks of flats. But if your client does own a block of flats, why not contact us simply to get that free desktop valuation that's available for them. So, thank you for today. Our aim is to help you and your clients make informed decisions about their property. So if you would like to provide us with any feedback on the webinar, presentation, content, or learn further about underinsurance and how to mitigate these risks, please let us know. Also, if you have any suggestions for future webinars, topics that you'd like to hear about, again, do please contact us. All you have to do is let your designated BDM know, or call the office, and we'll be more than happy to hear from you. So, that's there from today. Is there any questions at the end of the presentation?
I think we've got one from Thomas. So, is this just for existing customers with VASEC, or would we look to offer this for potential new business?
Okay, it is for existing customers, but if they were to take out a blocks of flats policy with ourselves, so it would be live with ourselves and on cover, then yes, we could give them a rebuild cost assessment after they've taken out the policy with regards to it. How quickly does the valuation happen? Thank you, Clark. That is the aim is to get the rebuild cost assessment out to your clients within 10 days of receiving the notification. Stuart, no, we don't have to wait until the renewal date to get the free rebuild cost assessment. As we say, if they already have an existing policy with us, you can do that straight away. That's fine. One for you, Rich.
Should VAT be included on a rebuild valuation for blocks of flats? Good question. I'll take that one away and I will go back.
Okay, we'll come back to you on that one then, Martin. Any more questions? Well, if there are any more questions that you've got, as we say, you can send them through to enq@vasec.co.uk, or you can send them directly to your designated business development manager, and we will pick those up and we will come back to you.
Just one point on the rebuild valuation is the rebuild valuation does belong to the customer. They don't have, we won't get that back. So we wouldn't automatically, if the sum insured was high, we wouldn't get that back. So we would strongly recommend that your customers do share that with you, and they share that with us, so we can then increase the sum insured to make sure that the protection's in place. Obviously that can be a difficult conversation because there will probably be an additional premium to pay, but you know, hopefully that will be worth it in the end, should the worst arise.
Yep. Okay. Well, once again, thank you for attending the session, and as we say, your reinstatement cost assessments are now available for you to book straight after this session. Thank you ever so much. Have a great day.
Thank you.